Hi, how's it going, everybody? Welcome to my channel. This is going to be the first series of many for short-term investments and long-term opportunities in current markets. Uh, Full disclosure on my investments, but primarily I want to really focus your attention today on precious metals. Alright, so there's been a lot of news lately on the precious metals market, specifically for gold and silver. And I really want to make this presentation a more insightful one that will hopefully shed some light into maybe what the long-term prospects are going to be for the market. This is primarily educational. I'm not selling any investment products, nor am I predicting anything. It's just basically to put some information out there and see what you think. Okay. Um, there are two precious metals that I really want to focus your attention on. The first one is gold, the second one is silver, but today's focus is going to be primarily silver, and I'll explain why specifically. But silver mining is one of the most interesting parts of silver. The cost for silver primarily right now is approximately $18 to $22 per troy ounce. Now, what's interesting about silver mining is that because the price is so low, it is actually not helping the silver miners pull out production. In fact, it's not even profitable at this point to mine silver because the spot prices dropped so much. Now, the cost for silver mining is expected to increase, and one of the reasons why it's expected to increase is because of inflationary pressures, and also including that silver is a byproduct of mining other metals, specifically zinc, copper, gold, and nickel. So in regards to mining, there really isn't a lot of supply out there. In fact, there are only several handful of countries that produce most of the silver in the world, and one being Mexico in the Western Hemisphere, and China being on the Eastern Hemisphere, along with Russia. And in Latin America and South America specifically, Chile and a little bit parts of Peru. So silver mining, for the most part, in terms of overall supply, is facing potential shortage in the future because of this fact. Now, current demand for silver is expected to increase in the next several years. If you take a look at this chart, specifically in coins and metals, you can see that there has been almost a 10% increase in the demand for gold. Although a small increase, but nonetheless an increase. Now, silverware has dropped dramatically since its peak, and most people don't really buy silverware, but it just kind of shows you that the demand has just shifted over from one category to another. Jewelry has increased a little bit to about 25%, but is expected to kind of keep consistent for the next couple of years. Now, the area that's been dropping primarily has been in photography, and specifically in that field, you have in 2000 a severe drop, and that's usually because of digital equipment. So overall, in terms of the bar charts and the categories, we see that silver has increased specifically in certain categories, decreased in others, but overall the current demand is to increase. The largest percentage is going to be industrial demand, expected in 2014 forecast to be approximately 55% of total demand. Silver consumption is primarily focused on a couple of things, primarily automobiles, solar cells, cell phones, and so on, with the primarily being in automobiles, about 22 to 77 million ounces of total silver consumption. Now, your demand side is about 80, so we're looking at a shortage of about 3 million ounces in the next several years. Now, thick solar cells, depending on government policies and investments, we're looking at solar cells being the next category for high silver consumptions, with the rest cell phones trailing at about 1.6 billion. Now, what's interesting about this is cell phones have an overall 1.6 billion ounces of demand, while their consumption is only 13 million ounces. So we do expect projections to be a little higher than that. We're looking at global light-duty auto production to increase about 160-fold in the next 3 years. So in terms of automobiles and how silver is used in automobiles, we do expect to have some sort of increase in price. GDP growth for the 77 main countries, or 6 countries here in the in the world, are predicted to increase. So even if we do have a recession or we have inflationary pressures, GDP indicators will most likely offset any um, deflationary concerns about consumption demand for silver. So we're looking at 2014 as being the primary year where the world is going to either stabilize at a GDP of 2.8%. Now, the United States is going to rebound about 2.2% GDP in 2014, while the Eurozone for the 27 nations are probably going to increase once it stabilizes a bit. Overall, what we're looking at is a positive trajectory in the next 3 years for GDP growth, specifically in China, where GDP has fallen to about 7.3% in 2013, but expected to drop just a little bit but maintain the average, while India is also the second largest one. Now, a lot of people believe that precious metals are a form of wealth accumulation. However, that's far from the truth. And one of the reasons why is because precious metals, for the most part, are used to preserve wealth. And I'll give you an example of this. If we're looking at a CPI number of 2.2% on an inflationary basis, your dollar saved at the bank with 0.4% on average interest rates will probably lose value and have negative interest rate growth in the next 5 to 10 years. So if we're looking at precious metals, we're really looking at capital preservation and a time when you're going to rotate those into other asset classes. Silver demand, as I mentioned in the other one, is composed of 3 categories: 60% industrial demand, 20% coins, and 20% jewelry. We are starting seeing an uptick in industrial demand if the world economies do increase, so we do silver prices to increase substantially. Now, the interesting part about this is that the lower the silver drops, the higher demand, and that's usually economics 101. What's this creating also shortages, and what's also creating is because of the shortage, as silver drops, the profitability for mines also drops as well. So you're going to see a supply shortage at probably in the $20 area. However, it rises too fast, too quick. What's going to happen is silver will become, there will be other alloys or metals that will be used as a substitute. Precious metals prices increase depending on fear, uncertainty, and also financial markets. But for the most part, if we take a look at crisis, this is an abstract, concrete term with really no sort of backing behind it. Now, we do know that industrial production has decreased, so technically the silver prices should come down, but we're not really seeing that. Alright, so this is the chart that most people kind of take a look at. In the historical ratio of silver prices, we're looking at primarily 20 years of consolidation between 1980 to 2005, which is a very interesting timeline because silver actually bottomed out around 1995, actually around early 90s, and a little bit under $5 an ounce. However, silver has also increased a lot in the last couple of years, almost to $50 on both occasions. Now, adjusted for inflation, 1980 seemed to be the peak. However, because we are looking at a regular price pattern chart, we notice carefully that the peak in 1980 was really never reached. So what do I buy, silver and gold? Alright, we're looking at the gold-silver ratio of about approximately 60 to 1 on the chart, and predominantly the peak usually occurred in about 1990. And that's it. Let's see here.